right, good morning, everybody, and welcome. It's TheoTRADE Chat. It's Don Kaufman here. It's May 8th, 2024. 3 minutes to go to the cash open here on this Wednesday. So we do have the S&Ps down just a bit this morning. I wouldn't get too excited about it just yet. The S&Ps are moving right now to, well, this is the expected move of the day. I think the expected move of the day, I had it 21.35. So the expected move of the day is 21.35. What is interesting, and what I'm going to point out, so the entire trading yesterday, the entire trading session came into the upper edge of the expected move. As expected, we just this morning broke off just a bit. And I'm going to elaborate upon that because it's important. It's really important because it's not just about what drives trade. It's about understanding, particular levels. There's a lot of money to be able to make, you could make actually if you understand some of these levels. Understand if we rally back up a little bit more, we're going to just push right into the upper edge of that expected move again, and some of you be able to take advantage of it. Nevertheless, there's actually there's a couple of companies out this morning, the likes of Uber and Shop and Rivian and Tesla and Intel. Their earnings, well, there's some earnings out there, there's some bad news out there. We'll explain all of it. It is rough. Intel actually guided lower, and what's surprising about that one, and I'm bringing it up right even before the pre-market, they only had earnings like less than 2 weeks ago, and they just guided lower again today. Stock's actually lower. And again, I'm going to talk about that because, well, I have position in there as well. So as I come into the cash open here this morning, just looking around the list of some of the usual suspects. What do we have this morning? So again, the dollar is a little bit bid, yada, yada, yada. Again, I'll discuss that after the cash open. The dollar being bid, it's kind of like a risk on, risk off to me. The bonds, this is the first time in a couple of days that we've actually seen a little bit of sell side activity. Watch that one carefully today because the bonds are overcooked turkey to the upside, in my opinion. Looking down the list, financials this morning, financials offered just mildly lower. There's no read on them. The energy sector, okay, mildly lower, no real read. So where's the selling coming from? You have a little bit of NVIDIA. It's down like $10 again. Tesla, though, is getting smashed again. So Tesla's going to drop all the way back to the 170 handle right about here. Meta in the pre-market, I'm seeing a little bit of sell side activity, a little bit out of Google. It's nothing. I mean, Tesla in particular, yes, but other than that, it's just across the board a little selling. In fact, Apple's actually going to open a little higher this morning. So let's come to the cash open. Negative advanced decline line, obviously negative ticks. Not too much to read into. So at the bell, as I was saying, negative advanced decline line, but not much to get excited about, right? 66 products trading to the downside. It's just about which products are trading to the downside. Again, Apple. So can anybody answer me the question, why in the hell did Apple even have an event for that yesterday? We have an iPad. It's bigger. It's bigger iPad. It's brighter. It's brighter iPad and it's bigger. Okay. It's bigger. It's longer. Whatever. I'm really getting sick of the Apple events. Anyway, it was an iPad. There was no AI discussion. There was all this conjecture around the Apple event, and it came out to be absolutely nothing. And the funny thing is, they're like, nobody really sold the market in Apple. They just didn't care because it's Apple. Warren Buffett likes it. Ticks this morning are a minus 700. There's nothing crazy going on. Stocks to watch, obviously, on a day-to-day basis are going to be big tech. There is some selling kind of across the board in here. It's pretty evident that Tesla, no one is liking this stock today. Again, there's specific explanation as to why, but we'll take a look at that. Okay. Just, it's funny. Oh my God, I got to go get that iPad. Did anybody actually think that after the event? Huh? Did anybody really think oh, I'm just asking. I'm not going to pick on anybody over here. Okay. I really want to know, if somebody's like, holy crap, I got to get that iPad. It has an M4 chip in it. Um, hmm. I'm just curious at this point if they have any relevance with it's bigger, it's faster, it's harder. Yeah, it was harder. It was like, impact. Ease up on me, all right? It's early. Anyway, um my kids thought that. Okay. I'm a giant child and not even I thought that. I was just looking forward to, can I buy that piece of crap iPad that they sell in Walmart? It's like 350 now, so I got to wait for it to go on sale for like 299. Okay, I'll be all over that. Sure. I seriously never have bought an iPad other than the piece of crap one that they have at Walmart for like $300 or Costco, wherever the hell it comes from. Um, Lost in the Woods is still wearing a pocket protector. Let me tell you, Lost in the Woods, it's not going to fit in your pocket protector, all right? It's a little large for that. Um, it's funny is years ago when the iPad mini came out, my wife's like, I have got to have that. We're now at that age too. She's like, I can't see a goddamn thing. Oh boy, how times have changed. My vision does not suck nearly as badly, for like reading stuff, but I'm sitting here with like the big goggles on. Oh man, let me tell you, older. Okay, it's not good. The eyesight thing just really pisses me off more than anything. Okay, doesn't hurt, doesn't do anything. It just really pisses me off. Went to Costco last night. I'm boycotting chicken at this point. I can't do it. Chicken in the bag cannot happen for me. There will be no chicken in the bag anymore. I'm done. I can't do it. I really can't. I actually did go there last night. I was like, no chicken in the bag. Still spent like $1,000 though on crap. S&Ps at this point are kind of holding their own. They're down 20. As I was saying, and I'm going to go into quite some detail about this, right? In the SPX, yesterday I gave you levels. Does anybody remember what the levels were? Because your entire trading session came down to two levels yesterday that I discussed. We talked about, we felt there was about 12 points of freedom on either side of this expected move. Okay, about 12 points. And the levels in there, okay, were 5202, okay, and 5178. And I actually drew on your screen yesterday the bracket of where we're going to trade into. Look at this. That's the high, that's the low, done. Okay. And it was really, I actually had a lot of time yesterday. I was working with Tony a little bit and I was actually scalping a little bit. I was scalping for the move back and forth and basically the ebb and flow in and out of the expected move. I mean, I'm talking just a couple of points over there and it worked extremely well. So today, those levels are still absolutely pertinent. However, okay, we broke off we broke off this expected move. So we broke under the 5178. That 5178, like if we rally a little bit more here today, that 5178 could come right back into play. And if it does, like if you crest above 5178, you're going to push right back into this. And that's why this morning's trade, okay, this is like one of those days. It's like, okay, hands off the mouse for the first few minutes of trade, fold the arms, okay, and let fly because right now there's no justification whether we're going to head right back into it or we're going to slide. There's no justification in the screen. You can read into everything all you want. There's no justification on either side of it right now. And as such, kind of got to sit and wait because, with all due respect, there's still, you're only like 8 or 9 points below. If you go 8 or 9 points higher, which is right here, you slip right back into that expected move. And that's the most pivotal side of trade. Now, on the flip side of it, let's say we see some sell side activity and we're already down, almost, 17, 18 handles. Well, things could get a little crazy, and that's fine with me. And that is when I might embark upon some trading opportunities. But for the time being, we're so close to that expected move, the upper edge of the expected move. kind of have to back away. And yesterday volume was anemic. It was garbage yesterday. I mean, the whole trading session yesterday, look at this, right? By the way, when I'm saying look at this is Monday. Garbage. Didn't even do a million contracts yesterday, barely did a million contracts. One of the things that at least I am surprised about is we went from a fairly extreme level of volatility to completely docile like that, like overnight. And I'm of the opinion you can't trust this as far as you can throw it. Maybe that's why the S&Ps are down a little bit today. Volatility subsides. Okay, I get it. Eventually, big expansive moves contract. I get it, right? What doesn't happen though is it evaporates overnight. And that is some of the trade that you're seeing right now is that volatility evaporated overnight. Don't, okay. Again, Monday was pivotal in this, but Monday, when we look at really, really low volume on Monday, I'll remind everybody that some major markets around the world were actually closed on Monday, which had big implications to the volume. So right now, yesterday definitely count. Today is, look, today is important. The volatility doesn't come raging back. All right. It might go quietly off into the night. And again, I stress to you that is important at this point because you can get markets locked right back up in what are these positive feedback loops. By the way, that doesn't imply that I'm bullish right now. It does not imply that I'm bullish. Okay. Cautious right now because that volume dropped. Forget about VIX. VIX is just a function right now of some of the price action in the marketplace. People, they put way too much weight into the VIX, way too much weight into it. I mean, really, at this point, some price action. Speaking of price action, there's nothing going on in financials right now. There's not much going on in the energy sector. Okay. A few of the tech stocks rallied back up, including like Meta. Meta's on a rip right now to the upside. Okay. NVIDIA. Okay. NVIDIA is questionable at best at this point. But interestingly enough, Google kind of floundering maybe a little bit. Microsoft, nominal, right? Like markets are listlessly down. That's it. This isn't any big sell side activity. Okay. But the day is young. The day is young. And again, now we're only what? 5, maybe 6 points away. So all we have to do is rally 5, maybe 6 points. You come into the 78, and we come into the 78, we could reject lower. No question about that. But it gets just slightly above it, and boom, we'll be sitting, okay, right here on that. That's the upper edge of the expected move, which is about $82 and change. So that's the game plan in a nutshell here is, and it's, if we do come higher, okay, this level over here, I wouldn't buy 78, meaning I wouldn't go out and rush like, ooh, I got to buy the 51.78. To me, that's a little early. I'd probably buy closer to like 51.80. Buy at 51.80, we'll drive to it. Okay. But I'm still suspect whether we're going to get there. And I'm making that very clear. I'm very suspect whether we're going to get there. Okay. Because I just don't see a lot of like fierce trade in here. I also cannot help but think like there's like an overwhelming number now of firms that are starting to warn. Everything from retailers, even some tech companies now. But the issue, and what is at issue, is it's not Meta warning. It's not Meta warning. It's definitely not NVIDIA warning. Okay. It's not Microsoft, not yet anyway. And those are the firms that matter. I saw a great statistic yesterday. Okay. A great statistic. And I am going to even post it into the chat room if I can find it again over here. I was posting it to the other guys, and the buyback and how significant the buyback inside of Apple happens to be, right? And it really comes down to, see if I can actually find it. I know I posted it somewhere yesterday. Anyway, Apple's, found it. Here we go. I'm going to post this in chat so everybody can see it. It's pretty simple. Apple's $110 billion buyback, just the buyback in Apple, is larger than the market caps of 418, okay, of the S&P 500 stocks. So just think about that one for a second. Apple, okay, is so significant that its buyback, okay, is bigger than 418 of the companies. Not there's nothing but its buyback. Its buyback is, $110 billion. That's more than 418 companies in the S&P 500. And that's why, on a day-to-day basis, like I just, it's an advanced decline line. No one gives a damn anymore. Nothing matters. Right? I like what somebody said, okay, Apple is out of ideas. There's no question. Okay, let's make it a car or a toaster. Whichever works first, we're going to make a car or a toaster. And then they turn around and actually, but let's do a deal, okay, with another car manufacturer in case our toaster doesn't work out. That's how bad it's getting probably over there at this point. Okay, I know you like your iPad. That's lovely, but there's not a lot of innovation going on in any regard. $110 billion buyback, okay, which is indicative of buy your own crap back. But that's the bid that rallied the marketplace. One aspect, though, really worth mentioning. So the big bid under the marketplace, specific to Apple, came on May 3rd. Go look back over here at the chart. There's actually May 3rd, a little bit of follow through the day after. Okay. Markets have definitely quieted down. Okay. Since the Apple news. And the Apple news was also compounded with a Fed announcement, yada, yada, yada. There was a lot going on over there. But the aspect that's in play right now is we don't have a lot of fuel, okay, one way or the other. Except there are many companies, again, as I said, they're coming out, they're warning and so forth, and that's exactly what we're going to look at. That's something that we just haven't seen very much of in recent years. Okay, when was the last time you had a significant S&P 500 company warn? Let's go ahead and bring up Intel. Okay, so Intel, and again, I found this one alarming because here's your earnings. Okay, you're 1, 2, 3, 4, 5, 6, 7, 8, 9 days past earnings. You're 9 days past when you just spoke. Okay, and now Intel sees revenue below the midpoint of the range. All right, what changed in 9 days? Right, obviously these are business or trading days, but what changed inside of 9 days? Okay, that one's a little bit disconcerting. So Intel trading in the $29 range. Speaking of which, I am still carrying an albeit minimal position in here. Okay, but I am up 32%. I have had very significant gains in here. I am at the point though, right now, where I am going to actually close it. We're going to have some fun too. I'm going to close it right at $30 even. So I'm going to buy back. I've been short Intel. Again, short Intel. Well, here you can see the trades. Been short Intel forever. No, since December. So from December to right now, I've been short Intel. Like, did I know anything back here on December 13th, the date in question? I did not. Okay, I just knew that this thing was absolutely parabolic. I didn't catch the top. Okay, but this one has actually worked out quite well. So it's been a while since anybody's seen me cover much of anything, and well, this one I'm going to cover. I don't need the margin. I mean, the margin in here is like $900, but after a 30% gain in there, I think it's time. And again, I'm trading it expressly at the right at $30 even. Okay. By the way, one of the first things I always teach newer traders, Never put numbers in a big round, don't put stuff in at big round numbers. All right, we got to go back to the SPX for just a moment because the SPX is torturing us right now. Here we are. Okay, we're right at what I think is that very critical threshold. As I said, too early to step in and want to buy this. You got to wait till we got maybe to 80, okay, because it could reject and come right back down from here. This is an important level, though, nonetheless. Very important level. Meta is kind of leading the charge to the upside today. So, to taking a look specifically, by the way, I'm short some Meta. That ain't working out. Take a look specifically at Meta. Order flow, insane in here. Okay. Call buyers are aplenty. That's all you're seeing in here. This is unequivocally, it's just heavy, heavy call buying. NVIDIA has come back substantially. I mean, this thing was trading at, $8.95 a few minutes ago. It's call buying mildly elevated at best. Not a huge amount going on. Okay. Again, very suspect in here. This is not like a huge buy program. So sit tight on that particular thought. Meanwhile, taking a look at Apple. Okay. Apple's definitely seeing some good size trade, nothing definitive. There's a lot of put selling going on, right? Which is, got a little bit of a bullish connotation to it. Some bullish, order flow going to be generated from it. And I'm also looking now at Google, and I'll tell you why I'm looking at Google. This had quite the little rip yesterday, struggling out of the gate though. All right, we'll see how this actually plays in the next few minutes. Again, I'm not, whatever. The S&P's opened down 20 and they've rallied up a couple of points. I'm not like all that enthusiastic about some of the order flow. This would turn into a real trading session if and only if we just shattered and started breaking off the expected move and selling off. Like that's it, people. That's your trade today. If there's going to be trade today, it is to the downside without unequivocation. Like this, we rallied to the expected move. That's why they call it the expected move. That's when you turn back around and go, that was expected. Like that's fine, right? Because that would be expected, which is pretty monotonous kind of trading session, which is looking like what it's going to play out. Nevertheless, and look at that, we're on the 78. Oh, hold me. Anyway, the Nasdaq is on a tear. Forget about the S&Ps for a second. Look at the Nasdaq. They like me. They really, really like me. Anyway, as I bring this up, okay, we're not home just yet, but it becomes a very monotonous day because we would rip and then we'll just sit here, do a little dance, make a little love, okay? But we're not home just yet, right? Not home just yet in any regard. And you guys, look, you can play the at home game and you can trade this in any way you want. It could be as easy as if we think we're going to continue to rally, and look, we trade, come over here at the 78 and the 78 level. I said if we get to 80, it would be more interesting. You can rally, from 80 right into the 90. Right? Intel's out. What was that 33%? Out of Intel. Does it make you happy? It doesn't really make me that happy. I don't really care. Okay. Anyway, there's a couple of different ways to obviously trade the SPX. You don't trade the SPX. And by the way, I'm not a huge advocate of trading SPX. Somebody in chat was actually asking me, by the way, somebody said, I didn't know you were short. You've been talking them up the past few months. Talking Intel up? Okay. Oh, hell no. Okay. Intel, what I was talking about is that Intel didn't damage NVIDIA. Intel's like coming out with like new chips that are going to compete with NVIDIA, and the stock didn't bid. Okay. Intel did everything they possibly could. And yeah, no, I've been short, and I've been short for a while in there. Yeah, no, I'm just shocked that it didn't damage NVIDIA more, So again, we're sitting on this very, very critical threshold. As I was saying, there's a couple of different ways you could trade. There's a couple of different ways you could trade if we start to break a little bit higher. You could just go out and buy spider shares. Now, somebody in chat was actually talking earlier about SPX. Again, from my perspective, okay, I think you can do some SPX butterflies. I think that that's very permissible. somebody just said SPX. Dimitri was talking about SPX butterflies, but I don't like, when people scalp the SPX, first of all, when you trade SPX, a lot of people don't know this, okay? You are charged an order routing fee. You are charged an order routing fee. You go, what? Yeah. So if you think about commissions, it's so ridiculous. People bitch about commissions. The order routing fee in here, okay, with the options regulatory fee, basically comes to 53 cents. And that's per side. 53 cents for a one lot. So it doesn't make a huge amount of sense to trade SPX, even if you're doing like pretty big size. Big size, it might behoove you to go over to Tasty and trade it. So in Tasty, and by the way, everybody has order routing fees. Everybody. I don't, oh, this firm has this and this firm. Everybody will pass their order routing fees to you. Tasty, okay, also has like clearing fees packed in there, right? So they also have clearing fees. But if you trade some size, if you're going to do like 100 lots and so forth, the clearing fees and stuff are really going to add up on Tasty as well. But at least they have a $10 max ticket charge associated with it. So the SPX though it's not that okay. It's not that economical to trade SPX. Okay. And somebody was saying like Tasty is worse than SPX. Tasty is worse than TOS for SPX. Yes and no, because if you trade some serious size, like if you're doing like 50 contracts in the SPX, you're going to save a lot of money in, well, there's order routing fees and clearing fees over there. It's going to be close, but you'll save money over at Tasty. It just depends on how big you are. Anyway, I'm just not a huge advocate though of retail trading SPX, even though the markets now are pretty damn tight. It's a huge contract. Okay. It is a huge, huge contract out there, but you still have to have, those order routing fees, which are kind of brutal in SPX. SPX has order routing fees. VIX does. I'll trade VIX a little bit, but VIX also has order routing fees. And that's just a function of the business. There's nothing you can do about it because the SPX is a Chicago Board Options Exchange. It's a SIBO listed product. It's SIBO only. So that entitles them to a monopoly. Okay. So how ironic that we're sitting right on the level that we mentioned yesterday. So we've got this one pretty well handicapped. And again, I'm not telling you right now, is it going to break to the upside? Is it going to break to the downside? There's nothing in this tape. There's nothing in this tape to discern one side or the other. Okay. I know you want to believe, I want to believe that Meta is going to continue to go. Okay. But it might not. I mean, again, it's a pretty equivalent tape. And as I said to you earlier, we could come right up to the 78 and I wouldn't be surprised, come right up to the 78, reject and come right back down. It's why I'm not executing into the bullish trade just yet. But if I were bullish, I could just trade like shares of the spiders. I could trade spider options, okay? Whatever it may be. If you're bullish and you thought we're going to drive into the expected move, which in the SPX is the 9091 handle, right? And if you thought we were actually going to be bullish and drive into that, when I say drive into it, I literally mean like drive right into it. Gives you a nice there's some nice runway in here for you to make a couple of bucks, and that kind of price action, you can definitely hop on board. All right. So just looking around over here, let's go look at some individual stocks as I was talking about earlier. We'll start with maybe a lesser known one, TripAdvisor. Okay, earnings. Talk about that's not good. let me just put it out there. That's not good. That's not good at all. It's down some 30+% on the day. So that is fairly hideous. Okay. Look, we've all seen down 30% before, but it just gave up the entire rally from November. And that is more or less what I find interesting. But if you look at this over like the last 5 years, okay, it's not good. It's really, really bad because that 15 level, is its last hope. So, by the way, now we're trading SPX. Okay, now we're starting to drive. You know, here's where if you wanted to hop on board, I'll just make a quick point with this. If you wanted to hop on board, just buy 100 shares or something like that. Anyway, let's just leave that on. I'm just screwing around here as I'm trading on the side and talking about a couple stocks. So I just bought 100, just 100 shares of Spider. Okay, and you go, why? Well, it's commission free. No, I just threw that on there for the hell of it. We'll see if we actually drive back up to the expected move. I think I was a little bit, and honestly, I think I was premature because I really wanted to wait till we got to this 80 level. Honestly, think I was premature in there. So I wouldn't necessarily run to do this until we hit the 80 level. I just wanted to talk about a couple of other stocks as I'm actually looking at this. And by the way, you can watch, you know, your little SPY position over here, and I've got a lot of crap on, but like, you know, if you don't like it at any point in time, you know, again, that's, you know, commission free. Oh, he sells it. Okay. So I lost $3.49 in that one. Okay. Next time I'll wait until we get to, well, where I said we should. But in any regard, I'm just scalping it out of some stuff over here just to make a quick point. So um, as I look back at this, TripAdvisor is in my opinion, kind of a critical break. Opportunity in here is an interesting one, but the opportunity I don't believe is right now. I think the opportunity is if it drops below like that 15 level, it's going to drive into be like a $3 or $4 stock. There's money to be made on the short side of this. None of us knew that that was going to happen. You know, like this is, you know, conversation piece is not about like, oh, what do you think it's going to happen? Look at the analytics on this. In the analytics, it's a $25 product yesterday, right? It's a $25 product yesterday with a $2.70 move. Actual move, $8. Ooh, I don't care who you are, that has got to hurt. Okay. Anyway, that huge move. Next on the docket. Next in the docket, we bring up Lyft. Okay. Lyft came out and earnings decent. Okay. Decent numbers. That doesn't really imply, you know, to what I'm looking at. What I'm looking at right now is it had almost a $3 expected move, right? So it's the $16 stock with a $3 expected move, which is big. Actual move, $1.55. This thing has room to run. It's been pulled back a little bit here. Next in the list, Uber. Okay, Uber also earnings announcement. Stock getting hammered a little bit. Okay, what's a little bit? Look, this is kind of crazy. It's a $70 product with a $5 and change expected move. Okay, it's not. It's at like a $4 move right now. Again, it hit the expected move and has rallied to some extent. My suggestion is that it actually probably heads back down, okay, somewhere near that 64 throughout the course of the day, all right, to resonate back to the expected move, the happy place. Because if you look at like, you know, $70 minus like the $6 in there, I'm just, you know, estimating somewhere just in that like 64 handle, okay, would be very reasonable at this point. Should I put that trade back on over here? Okay, I was still at the 79 level. This thing is torturing me. It's just torturing me. All right. Somebody comes in. Is Bierman still working here? No, I buried him in the backyard. Had to happen sooner or later. That's how this ends, you know. Okay. How's the story end? Bierman buried in the backyard. Okay. He had one too many MACDs. All right, continuing on. Okay. You know what? Uber and Lyft, I actually have taken them recently. They are ridiculously expensive. Here, I'll put this one back on. We're having fun today. Oh, come on, really? Okay, that's just a pile of crap. I missed it. See, I routed at 59. That's just a crappy. That fill took forever. Anyway, I'll leave that on for a few minutes. I'm not even gonna look at it now. So back to a handful of stocks over here. Oh boy, we've turned around today. Oh, see this day sucks if we go back to the expected move. So we covered Trip, Lyft, Uber. Okay. The next one that was a little bit on the shocking side is right here. Is Shopify. And I say shocking. Okay. What's shocking? Shocking is, well, look, it was a $77 stock with an $8 expected move, right? So if it sells off, it should be what? 69 bucks. Okay. Where is it right now? Yeah, it's through it. That's important because if it misses the one deviation, usually it just goes crack and goes right to two standard deviations. It's basically where it is, sitting on like a two standard deviation move right now. That is big, that is bad, that is ugly. Now, the reason I'm bringing this up is so we are talking, okay, about some technology stocks today. You have Intel, okay, you got Shopify. Again, everybody is going to come up with summation and reason, okay, that, look, Shopify says AI supports lower headcount. Well, they're still killing the stock, right? I mean, revenue outlook sucks, okay? Whatever way you want to twist this, okay, there's some numbers that are coming out that you have to start to pay attention to. And if you don't, you're just going to miss it. I mean, like, look, there's a lot of retail out there that's getting hammered. I always like to bring up Lulu because I've been told time and again by traders, it's impenetrable brand. It's getting killed right now. I mean, this thing on a year-to-date basis, okay, is down 31%. You go Nike, impenetrable brand. That one is down about 12, 13%. So retail started getting a hit. Now we're starting to see it bleed maybe a little bit over into tech. Okay. Like Trip, all right, that's a one-off. Uber, obviously Uber's down, Lyft is up. So we're just exchanging market cap. Shop, though, is a big one. Okay. The next one on the docket here, this one's been in the news a lot lately. Okay. Rivian, this thing is just, it's reeling right now. At this point, I think the only hope is a buyout. Okay. Who's going to buy them? I don't know. Because when you start looking at the market cap, it's only a $9 billion company. Just to, just bring something up over here. Ford, GM, we're looking at $50 billion market caps. I'll remind each and every one of you, okay? Because when we start talking about the AI trade and so forth, I want everybody to remember, Rivian came out and it was such a spectacular, 100, $200 billion IPO is ridiculous. A $9 stock right now, okay? Again, it is a $9 stock with a $9 billion market cap, okay? Off of what was at one point, let's just, call it $100 product. It's 10 times the size, $100 billion, almost a $200 billion market cap at one point. It's been decimated, okay? This is one where, and I say this without hesitation, you do not short this. I'm going to say that again. You do not short this. I think it's a buyout candidate. Maybe not at this price point yet, but I think it's a buyout candidate, and I think you get your head taken off in here. But by the way, I've looked around one, but I haven't really been in it. Like I haven't driven it. Just curious if anybody has. Okay. Anybody? Anybody have one? I see a lot of them too. Okay. I see a lot of Cybertrucks. I do see a lot of Cybertrucks. And I have to tell you that Cybertruck thing still, I mean, even though there's a lot of them around here now, but every time I see one parked, there's people standing around it, just like gazing at it, taking pictures of it. And which brings me to the next stock to talk about, of course, is Tesla. So Tesla, once again, is in the news. This one, well, it's interesting. I don't look, okay. Everybody's like, whoa, what's going on in here? The Department of Justice, okay? Justice Department, Department of Justice, whatever you want to call them, okay? Big bad people are looking into big bad Elon Musk, and specifically Elon Musk. Okay, I'm just going to go ahead and throw this one out here. I'm not sure, but I'm starting to think it's political. They have gone after this guy for absolutely everything. By the way, I'm not defending Elon Musk at all. I mean, he says some incredibly stupid things from time to time. That's okay. Okay, I'm all right with it. But I'm starting to think they're going after him for political reasons over here because what he said was so many years ago about autopilot. Okay. And, if you know the history of Elon Musk, it's overpromise and underdeliver. So, buyer beware, buyer beware out there. Sully was saying how ugly the Cybertruck is. You know what? I own a Jeep Wrangler, and that thing's like utilitarian. It's ugly. It's like a Jeep, you know. But look, is a tank ugly? Yeah, but screw it. If I could drive one on the road, wouldn't you? Hell yeah. Okay, 7,000 pound tank. Okay, I am in. I am in. Um, by the way, yeah, with Elon, I am of the opinion at this point he's a naughty monkey and he's going to be taken out to the woodshed a little bit. And unfortunately, it's going to be a rough ride for Tesla itself, literally and figuratively. It's a rough ride. But that being said, I don't think that EV is going away. I know that the media is so negative on EV all of a sudden. Okay, they're negative on like we have friends that have a Ford F-150 Lightning. What a piece of crap that is. I mean, it's so bad it can't even charge. They've been fighting forever with Ford to try to get a buyback so they can get it bought back. It's been nothing but a nightmare. And he's a big trader. It's one of my neighbors in St. Croix, but they have the truck, and it's been just an absolute nightmare for him. Anyway, with that, that's it for some of the stocks I have on here. Again, Intel I closed. The Rivian Tesla trades are fairly interesting. There's not a huge amount of earnings coming out. Like, by the way, I always build like scans for earnings. The scans right now on thinkorswim are not working that well. Okay. Like there's other stuff in here. The point that I'm trying to make with the scan, there's nothing big left in the tank in terms of earnings. Like, so let's just assume at this point earnings season is over. Coming onto the calendar, there's a petroleum status report today. Not going to be a big market mover. Okay. Tomorrow, the Bank of England announcement, not probably going to be a big market mover. Jobless claims always moves markets. A few little blips are in the radar screen, but people, okay. The thing that the marketplace has been trading on substantially has been catalysts, and there's just not a huge number of catalysts. Yesterday we saw a little bit of volatility because of some Fed speak, and there's a little bit more Fed speak throughout the course of the week. Generally speaking, the next big announcement would be like ridiculous consumer sentiment, okay, which is totally ridiculous. But yeah, so somebody's asking me if I would go long Intel at this point. No, okay, I would not. I would not. And I'm going to tell you why I wouldn't go long Intel. Like, I don't want to just say no and leave it at that. I wouldn't go long Intel because if the market as a whole comes down, Intel will still continue to see sell side. Now, I would say this though, if the market as a whole starts to decline, Intel might be opportunistic, okay, before everything else is, because it has already had, the living crap beaten out of it. But this is such a significant decline. With all due respect, down 37%. This could be life changing for Intel. That implies management changes, fire the board. Things are going to get crazy over there. I'm not happy right now with my little trade in here. Okay, not happy. I don't have to be happy. I don't even want to be happy. I'll leave it on for a minute or two more. Okay, but I'm not. I'm just nothing's going on today. I mean, when my P&L is moving, like look at this. My aggregate P&L in the day is like $100. Really? No, I'm not kidding. It's $100. When my P&L is moving $100 in a day, okay, it's a friggin' slop fest out there. So there's not a lot of sell side activity. Everything that was moving higher, like Meta stalled, okay, completely and totally stalled out, okay, dead, stalled. There's still a lot of call buying in there. NVIDIA rallied back up to unchanged and has done nothing since. That's the last 30 minutes of trade almost. It is 30 minutes of trade right here at 48 to about 7:15. That thing is completely stalled out, right? And again, Ernie was saying, is Intel too small for a catapult? I mean, look, if the market continues to propagate higher, it's been going down. So its correlation properties are not, they're not great. I mean, you have a product that's going straight down with a marketplace that's rallied back. And to me, that is, subjective at best. I don't like it. Okay. You got to look at stuff like right now for catapults. Like if the market's going to rally, Microsoft has to go up, right? Seems easy enough. If the market's going to rally, you know, obviously Apple's been involved, but Apple, even had like some deviation out of there. Okay. I'm going to get out of the spider again. I'm getting annoyed. I'm not doing this anymore. Okay. Anyway, now we're having fun. Okay. Seriously, they filled me and look at that. They filled 75 and they filled, it's ridiculous. Okay. We sat at that 78. Check this out. Sat at the 78. We got to the 80 for a brief and fleeting moment and they're coming back off. Okay. So we're not right now pushing into the expected move. I don't care. Again, I'll lose a couple of bucks in here and like literally a couple of bucks. If we come back up later though, I'll make the few dollars out of it. All right. But some little bit of selling starting to bleed back into the marketplace. Again, as I said this morning, it's frustrating because your whole trading day is dependent upon, and you say whole trading day, well, this is moving and that is moving, but everything, okay, is still moving in relative cohesion right now. And to say otherwise, oh, this stock is up and that market's down, like look at stuff like Starbucks. No one's touched this thing in days. It's got a little bit of a bid back under it. Okay. That could be opportunistic at some point. Starbucks rip into the upside. I'm kind of curious about something in here. Okay. Look at this. There's call buying in Starbucks. I knew something was up in there. I'm looking at it out of the corner of my eye. I'm like, what the hell's going on? Look at that. That's call buying. Okay. That is a marketplace that traders have found that they can influence. Okay. How far can it go? But there's no question that that is purely unadulterated order flow being shoved into a hole. And it's just a matter of being able to pick up on some of it. By the way, I'm not looking at Walmart for that. I was just looking around. I also see, Broadcom is crap lately. Doesn't think, barely even trades. It's just crap. One other one I wanted to look at. I wanted to show you guys what I thought was interesting. I want your explanation for this. Okay. XLF isn't really selling. It's 15 cents. Okay. It's 15 cents. It's dribbling lower. Believe me, I want XLF lower. Okay. Goldman Sachs, like who doesn't like the idea of betting against Goldman Sachs? Just because it's Goldman Sachs. Okay. You want them to fail every single day. Like I even know people that work there and they're like, yeah, I know it's really fun to watch our stock go down. Anyway, I have a good question for you. Why is XLU exploding back to the upside? Anybody have an answer for this? Okay. Because I actually wanted to find right in the time frame, okay, in the time frame here of 4/16, April 16th, April 17th was the first day of a rally, April 17th. What was the marketplace doing, okay, on that day? And we were already in the midst of some sell side activity at that point in the marketplace. But I have to tell you, I don't have a great reason for XLU rallying other than this is some type of like a duck and cover trade. Okay. I mean, to look at and obviously somebody might think that there's rate cuts coming, but to me that I don't know if that is really resonates because its yield is only 3%. If rate cuts are coming, like isn't it a little early in here? Okay, to get in there, like the marketplace again, it really does feel that rate cuts are coming. I'm starting to believe a little bit more though now. If you said that rate cuts were coming like in March, I said to you from January and February, I was like, people are smoking something. Okay. Now, when you look at the idea of rate cuts, though, this is not even really, that's not what I would term live. Live means like, probability wise, closer to 50-50, like 60-40, I think it'd be live. There's a 70% chance of no cut in July. But when we start getting to September, September is the first month. The September meeting is this is live. This is actually promoting the idea there's going to be a rate cut now in September. I don't, you know, the economy could be slipping very, very quickly right now. That's the only way that we're going to have a rate cut in September. But look at some of the things that are coming out. We're starting to see companies that are saying just that. Like, economic conditions are not great. If you guys missed the weekend update, on the weekend update, I mentioned 4 different companies that saw significant consumer issues. And I wanted to bring it up because XLU it clearly sees something economically, I would say, wrong. I think that's the only summation of the utility sector at this point. The only thing I can see is it sees something wrong with the economy. Okay. Meanwhile, though, it's not having negative implications per se I mean, look, this is the day Microsoft actually kind of peaked out and started falling. But its negative implications are not being felt throughout the marketplace. Like, NVIDIA is a stone's throw off its all-time high. Meta, stone's throw off all-time high. I don't care if it got, cracked lower from the earnings. It just doesn't seem to matter right now. Okay. You got to be mindful. I mean, Amazon hit, okay, and I'll be clear about this. Amazon hit all-time high. I was just bringing up Amazon again because there were previous highs in here. Okay. Amazon hit an all-time high. When was that trade? And again, to remind you, it was yesterday. Amazon literally hit an all-time high yesterday. Okay. Meanwhile, at the same time, we're seeing, okay, what could be some slippage of economic conditions. There's got to be a reason that XLU continues to rally. And that is something you better believe we are going to be watching very carefully. Okay. So, yeah, I'm a little bit perplexed also in Starbucks. By the way, Starbucks, somebody was asking if this is a candidate for Catapult. I like this one better than Intel. Okay. I like this as a bullish candidate. I like it better than Intel right now. I also like the fact that Starbucks go like 72 days out and it's $5 wide spreads, but they're doable. Like this is the $5 wide spreads, trade for like $1.40. I don't know. I'd have to figure out some decent trades in here. It can be challenging. It can be challenging to find the right strikes. I was hoping, that this would trade for a little bit less because at $1.42, I'm going to have to sell $300 worth of premium, which means I'm going to have to do quite a number, okay? Quite a number of premium sales to actually finance it. So I don't know if that's going to work for a lot of people. And again, like doing this trade out here for 44 cents, that's a shot in the dark, but then the stock has to get above 80. Crazy thing is that's plausible. I mean, it's a total like shot in the dark, but it's plausible. It's actually not a half bad idea. I may look at that one a little bit later for Catapult because we rally back up in the S&Ps. Starbucks will come back. Okay, I mean, because that will be strong economic conditions. But again, a lot of headwinds right now. I've also been shopping in Caterpillar a little bit. I'll be honest with you though, Caterpillar, I want to get bearish in. So Caterpillar is through its earnings. I think Caterpillar is totally viable for a bearish trade. I'm going to tell you exactly why. Caterpillar, from a correlation point of view, is friggin' perfect. It's absolutely like if you took a picture of Caterpillar, okay, against the picture, if you will, of S&Ps, it's almost perfect. In fact, come under studies. Okay, go to correlation. Double click on that, hit apply, hit OK, right? Obviously some earnings and dividends in here, but watch what I'm going to do. I'm going to drop. I'm going to drop off the volume subgraph, hit apply, hit OK. Okay, that's got really strong degrees. I mean, it's averaging closer to like 80+% correlation in here. Always going to be deviations. By the way, when you have dividends payable, especially big dividends, you're going to see big jumps like in correlation. It's just an impact of it. You can actually screw with charts and extract dividends. You can do that on thinkorswim. A lot of people don't know that, but it is what it is. You know, some of the equities, okay, you can get rid of adjust for dividends. Like it's a bunch of crap. You just have to kind of know what you're looking at in here. Speaking of knowing what you're looking at, but again, in Caterpillar, I would want to get bearish in here because I think if the S&Ps fall, Caterpillar is going to fall flat on its face, which would be awesome. You might see catapult to that effect in the days to come. Anyway, with that being said, about 8 minutes, I have to turn it over to Jeff Bierman. Apologize. This has been a less than inspiring session for me. How are some of our trades doing? TLT on the dance floor, Goldman Sachs on the dance floor. Nothing to see here. Okay, I mean, I'll bring up the TLT. Okay, TLT for the first time has had a little bit of sell side activity. When I say we're on the dance floor, like, look, our spread's right where it needs to be. You know, we just need a little sell side activity, a little TLT. Just push it off the edge of the cliff. It's good stuff. When it comes to Goldman Sachs, okay, we need a little bit of sell side activity. Look, that we're right. Like this $20 expected move. We're trading 442. We need is like, 435. 6-7 bucks. That's it. So have no fear on that. It looks like the S&Ps at this point are going to migrate a little bit higher. Okay, and we are going to see once again. Okay, much to my dismay, it looks like we're going to go right back to the upper edge of the expected move. And again, I say much to my dismay, but it's nothing like, bullish or bearish. It's just simply the fact that we do this. Okay, we come up here, we do a little dance, make a little love, get down tonight. Okay, is anybody trading it right now? Because I just totally missed it because I'm frustrated. I have to hop on a meeting in a few minutes too. So I will not be sitting in front of the computer watching every single tick. Nevertheless, just taking a look though, there's a really high probability at this point, really high probability. We come right up here, okay, skirt the edge of the expected move. So the Nasdaq is now unchanged in the day. The S&Ps are basically unchanged in the day. Any sell side activity has evaporated as we get sucked. We sucked, okay, back into the edge of the expected move. Something sucks, okay. Anyway, $60 expected move throughout the course of the week, and we're home. What's the rest of the week going to look like? And I like to do that too because there's still like $40 of movement, which is also a little bit surprising. There's some more volatility being packed in at the later portion, the latter portion of the week. So with that, I'm going to turn it over to Jeff Bierman a few minutes early because I'm going to hop on a call. So Jeff is actually going to do Ask the Analyst. Ask the Analyst is what Jeff Bierman will be doing today. He's going to be doing the May 2024 lightning round. That is when the professor will actually read chat. So Jeff, okay, is a little bit of an anomaly that way. He does not read a lot of chat, which is sometimes actually a good thing. With all due respect, it's actually sometimes a good thing. I read chat a little bit, but you read chat a lot, you get distracted and so forth. I do that. I get distracted a lot. Jeff, though, is much more, guided with principles and specifically, for our educational component here at TheoTRADE. It's what Jeff does on a day-to-day basis, the coaching sessions. But I like when he actually does this session. So it's Ask the Analyst. He's going to go in there. He's going to rattle off as many stocks as you guys want to start putting into the chat room over there is what he'll cover. So one last look at the marketplace, and then of course I will turn it over to the professor to make sure we got him an invite link on here. All right, so we'll be pulling the professor in here momentarily. Anyway, S&Ps at this point down nominally. Okay, everything's driving right towards the expected move. The XLF has a bid back under it. So you can see XLF coming back just a little bit. The energy sector basically flat on the day. There's no read there. What changed the course of some of the activity today? Meta had a bid under it. It's flat right now. NVIDIA, a little bit of a bid, basically at highs of the day. Nothing to see here. Microsoft, though, really shifted. Microsoft really shifted markets here. Okay. If there's one stock that moved the market today, I mean, yeah, you saw Meta out of the gate. You know, Meta's at highs right now, but Microsoft was actually down this morning all the way to 407. That's a almost a $4 move to the upside from low, and that is what's carrying a lot of the move, expressly inside of the Nasdaq. Okay. I mean, look, you don't have to go very far to find what's moving markets because it's the usual suspects in here. With that, okay, there's money to be made today. It is going to be a little slow, okay, at least right now. If volatility is going to pick up, and I want to leave you with this one thought, okay, specifically for the remainder and just the remainder of today, okay, there are two ways that volatility will really pick up today. Okay, so the two ways are you start dropping below the 78. That's the 78 right there. You drop below the 78, volatility is going to pick up in the marketplace. On the flip side of this, as crazy as it sounds, that 5202 come up above that, we're going to explode to the upside. Okay. We're just on like a little bit of a teeter totter right now, sitting near the expected move. It is what it is. But the volume, okay, take a look. Volume died out. You can see the big volume spike as we came closer to the expected move. But anyway, things and volatility will pick up only really outside of those levels. With that, stay tuned. Professor Jeff Bierman is coming on right now. Ask the Analyst. He is going to allow you to ask a ton of questions in here. Stay tuned.